How's it? Sean here from Mel's YouTube book site, YouTube channel. Okay, welcome to lesson 4. Now, in this lesson, we're going to do a breakdown of the wages and salaries every month, just to show you how this is calculated. It's very important to know how we get to how you pay your employees in your company, how they get their salaries and what the amounts is. So that's why we're doing this lesson. So now remember in lesson 3, okay? We did the cash book. Remember the cash book in lesson 3? And we had the wages for Constance was $148.50. We did Mel's salary, which was $282 and $282. We did the medical aid, $10, and we did the UIF and the PAYE. So pay as you earn. Okay, sorry about it. I never pronounced that pay or PAYE. How the hell? Okay, pay as you earn. I'll just use that as the explanation. Okay, so these salaries, these amounts here, how did we get them? It's important to know they're not just magical numbers we put in here. So this is the lesson we're going to explain to you how we got those figures. All right. Now, it's also important to know that when we do the expenses account and we go into the trial balance, all these figures will have to be put in like that as well. So it's important to know how this stuff comes about. All right, so let's get started. Now, just watch my mouse as I go along. The UIF is unemployment insurance. PAYE is pay as you earn, and medical aid insurance. All right, casual wages. We had a guy that came work for us casually, so he doesn't pay as you earn or UIF or medical aid. So it was paid in the petty cash to Joe, this $20 here, and he didn't have any of those things. So that's not taken off. Casual wages, you don't take those items off. All right, got it. Now, wages. Now, Constance earned $148.50, but she didn't earn enough to pay as you earn. But we did take her UIF contribution. So Constance's wages is $150 per month, but she was paid in the cash book only, that $148.50, because UIF of 1% was taken off her wages, leaving a net wage of $148.50. Okay, so when UIF was deducted from her wages, the pay as you earn has not been deducted from her wages, as I said earlier, because she doesn't earn enough. All right, so she doesn't pay AYE, pay as you earn. Now, the UIF and the pay as you earn, which was $1.50, the wages UIF was 1% of $150. That will equal $1.50. Therefore, Constance wages equals that $150 minus the $1.50, which comes to $148.50 paid in the cash book. So that's her covered. You see how she was paid. Okay, salaries. That was Mel's salaries. Okay, Mel's salary was $300 per month, but she was paid in the cash book $282, and she had her UIF taken off at 1%, leaving a balance of $297. Then a further amounts were taken off her salary for pay as you earn, the tax part, of $5, and her medical aid was also $10, leaving her a net salary of $282 paid in the cash book. So that's how we got to Mel's salary. All right. The UIF and the pay as you earn of $8 from Mel's salary. Mel's salary's UIF is 1% of $300, which equals $3, is her UIF contribution. Therefore, her UIF of $3 plus her pay as you earn to the receiver of $5, leaving a balance of $292. Okay, dollars. Now, Mel's medical aid, $10. Mel's medical aid was also taken off her salary as well and paid in the cash book. Remember the $10 for the medical aid. This is $10, leaving a net salary of $300 minus the $3 minus the 5 from all up here minus the 10. So it's $282. So that's how we got to Mel's salary. All right, I hope I'm making this clear to you. All right, now the company's also got contributions. The UIF for the company, wages and salary, UIF and pay as you earn plus the company's contribution. Okay, so $14. Let's start with Constance. Constance is $1.50. That's her UIF. Plus the company contribution of $1.50. Company contributes equally to the UIF. It's an equal amount. So it equals $3. Mel's UIF of $3 plus Mel's pay as you earn plus the company's contribution of $3 equals $11. So the company also contributed $3 to the UIF of Mel. So that equals now $11. The staff and companies contribution $14. Now just listen to me carefully. I'm going to go through this slowly. Together with the company's contribution and the pay as you earn payments to the receiver of revenue, the total is Constance UIF and company contribution equals $3 plus Mel's UIF and the company contribution and pay as you earn equals $11. Therefore, the total payments to UIF and the pay as you earn paid to the receiver is $3 plus $11, which equals $14. Okay, so that's where we got that $14. And the medical aid is $10. Mel's medical aid was paid in the cash book, which equals $10. So as you see here, I'm just going to go back there again when we did this in the earlier lesson. There's Constance. There's the receiver's $14. There's the Discovery medical aid. There's Mel's salary, and there's Constance's wages. Now, I'm hoping that that little breakdown that I've just done now made sense, because that's how we broke it down. All right, so we're at the end of the lesson. Thanks for watching. Look, please, if you like this video, like it. Please share it with everybody you know, and subscribe to the channel. Okay, please, and also leave comments and suggestions. Any questions? I'm more than willing to help you when I can. All right, good day on you.